Hi everyone, Woody here today with another Fat Tail Daily video or podcast, whatever you want to call it. Today I'm joined by Callum Newman to dig deeper into his latest piece about adapting trading strategies in different market conditions. Now, Callum shares an illuminating past trade in GQG Partners that shows the importance of being flexible in your approach to the markets, especially when traditional momentum strategies might not be delivering the usual opportunities. Now, what caught my attention was how this ties into the broader challenge that many investors, people watching, are facing right now, and that's finding alpha in a market that's not really showing clear directional trends. So I've got several questions for Callum that I think will help unpack these ideas and provide some practical insights for everyone watching. So let's start with something that I think is really central to your piece today, Cal. You mentioned switching from momentum trading to what you call a counterpunch strategy in this low momentum market. Can you elaborate on the specific signals or market conditions that tell you it's time to make this strategic shift, and how investors watching can recognize these transition points?
Yeah, I mean, at the moment, we had it's funny the way we're finishing the year compared to the way we started. So in January, the market at that time thought rate cuts were coming in this year. It kind of electrified, especially the small cap sector, which I generally deal with. But the whole market felt very bullish in January. We started to see some stocks really break out. I can tell you right now that December, it's the complete opposite. Almost everything has completely slowed to a crawl. There just isn't the same level of volume or price movements in the market. And so what that tells to me, oftentimes, it depends on what type of trader or investor you are, but, a lot of people will look for what they call breakout trades, where a stock, breaks a key level and it really starts to push up. We don't have a lot of that happening at the moment. There's been one or two in the last few months, but it's just not that type of bullish market. So the risk at the moment is you buy a stock and it just grinds along sideways and doesn't really do anything. And that's fine if you're actually investing. But if you're looking for shorter term alpha, as we say, it just doesn't seem likely to come from a momentum driven market. We don't have a strong narrative at the moment in anything. Even gold, which has been one of the stronger sectors of the market, the gold stocks aren't doing much. Everybody's worried about China. There's no real big pull on the mining sector at all. Retail, that type of thing, still under the pump. Banks probably driven up too far now. So it's very hard to get a lock on anything that seems that exciting. So with that dynamic in mind, in the past, when I've seen markets like this, you've got to think a little bit differently. So you go, well, there's no big momentum, there's no big breakout trades. How can I rip out alpha? And so you sort of reverse and you go, well, if we get an indiscriminate sell-off or some type of sell-off, that's a chance to buy up a stock that you like, if it's one that you're familiar with. So that's what I tried to illustrate with his piece.
Well, in that example which you used, the GQG example, you initially made a 91% gain through momentum trading, then later returned to the stock with a different approach during its crisis or its pullback, I guess. How common is it in your experience to successfully trade the same stock using different strategies? And what are the key things people might need to understand to be stand about a company to be able to do that effectively?
Well, I mean, again, it always comes back to what type of investor you are. And so, for example, last year, GQG was a bit down in the dumps. It was one of the stocks that really started to push out of the downturn up into the first half of the year. So it was a classic momentum trade. Then around about July, you could arguably say it was getting too expensive because it pays out most of its earnings. There's only so far the market's going to bid on that type of stock. And I could tell at the time it hit over $3 a couple of times, and then it was pushed back. And at that stage, the momentum, as a momentum trade, it started to flag. But as a business, it's fine as such. But then we had that volatile period in August that flashed up for a bit. That took out that momentum trade out for us. So GQG started to just go sideways, which a lot of stocks do. But of course, if you're looking for short-term gains, you need some sort of catalyst or momentum or something to have volatility to happen to generate that return. And so for August, 3-4 months, GQG in particular just went sideways. So there was no real opportunity there unless you were just holding it for the dividend type thing. But then we had a recent news that shocked the market in terms of that, because it's a fund manager, one of its investment companies, or companies that it invests in rather, was the executives there were accused of bribery and fraud, and not good news. So of course the market knows that it's heavily into this stock, and it got dumped. Now generally I don't like going into messy situations where stocks are suddenly the future growth or the credibility is brought into question, because it just creates a difficult environment to operate in. Having said that, GQG had already come down, then it gets smashed again, and then you're watching it, and then we had reason to believe that that immediate drop, the big drop on the day where it fell 26%, was probably overkill, and then we got another big drop, and that's why I call it a counterpunch trade, where you go, the difficulty that they're in is probably now priced in, and it's time to start thinking about going the other way, which is what I did in this instance.
Yeah, you talk about the importance of previous preparation and maintaining watch lists of stocks even when they're not tradable, and I guess that falls into that category quite nicely. Could you walk us through your process for monitoring those kinds of stocks? Like, what specific metrics or developments do you track that might signal either a momentum opportunity or a potential counterpunch buying opportunity?
Well, in that instance, it helps to understand the context. So if you go back again through the first half of the year, GQG had been very strong. A lot of the fund managers will put it out there as one of their favorite ideas. It's run by a very credible guy. He's a very successful investor. All the investment strategies that they have within their fund have done well over the years. So it's a compelling, strong business. It's got lots of cash. So it's a solid business on the market. So for that reason, you know that it's going to be well supported at some level. Yeah. So, which is very different to, say, an explorer that doesn't have much money and, that type of thing. There's a fragility to those type of stocks. So with that in mind, I just kept an eye on it because it was still opportune over the long term as such. It just was not doing much in the short term. So the question was, for that particular business, could they keep aggregating more funds under management, because that's where they make their money? So they had a bit of a slowdown. That's why the stock ran out of steam as a momentum style trade.
Yeah.
So I just have a basic watch list of all sorts of stocks I'm interested. So with Australian Small Cap Investigator, we had another similar situation. So my last issue was about another stock called PWR Holdings, which was also a heavily favoured stock and ran into a similar sort of double sell down type thing that pulled the valuation from being a little bit above the market, a little bit expensive, not quite opportune in the short term, to, maybe it's time to think about going the other way. So that's what we did with Australian Small Cap Investigator in that case. So it's just a matter of finding a stock, understanding the context, seeing the story, and then you go, well, maybe I'm not going to buy it today, but let's just see what happens. So in this instance, I made the decision to go, well, this thing has sold down now too hard, and there's an opportunity to look to go the other way. And that's where I think a little bit of knowledge of how day traders think it can be helpful, even if you're a long-term investor, because you can start to use the price action and the volume in the short term to see if there's buying support for a particular stock.
Yeah, and I guess it really helps to know the business you're invested in too, right?
That's very important. If you want to do this, what we're calling the counterpunch idea, you need to understand, because what happens is when you get these complicated situations is suddenly everybody who owns the stock is like, oh, what's going on? Do I dump? Do I sell? Do I buy more? That's where the volatility comes in. So if you have a good knowledge of it, you can understand the risk reward of what you should be doing. There are many times, I remember, this is a while ago now, but there used to be a stock called Blue Sky Alternative Investments, and their credibility was brought into question, and a subscriber wrote and said, should we buy in the dip? In that instance, buying the dip would have been a horrible idea, because that stock completely collapsed and later delisted. So you've really got to know what you're doing.
Yeah, and I guess that sort of rounds nicely into my final question, which is where you touch on the psychological challenge of buying sell-offs like GQG that we've been talking about after the Adani news. What framework or methods do you use to distinguish between a genuine buying opportunity during a panic versus a justified market reaction to deteriorating fundamentals?
Well, you could really only take it case by case. So in this instance, the background to this too is that US dollar based businesses have an advantage in the market because the US dollar is so strong and it's expected to stay strong because of the US. So on that level, GQG is quite appealing because it earns in US dollars and then it pays those out, which are then converted into Aussie dollars. And of course, the US markets are up big this year, so that helps their overall performance. So again, it comes back to understanding the context of the market. And if you put this Adani issue aside, they still have growth tailwinds to their business over the medium to longer term. It's just a short-term issue that's flared up. In one way or another, it will be addressed. But because the stock has come down from at one point over $3 now to $2, it's a lot cheaper than what it was. So you have to sort of address it if you're comfortable doing this type of thing and go, well, I'm glad I didn't buy it at $3, but it looks a lot more compelling at $2.
Yeah. Good stuff, Cal. Look, if you find this interesting, please do feel free to read Callum's full piece. The link's below. Check it out and let us know what you think. Cheers for that, Callum. That sounds good. The strategy you're employing is clearly working, even though the momentum might have dried up. The track records of both your advisory services are going really, really well. The small cap systems obviously is the more short-term trading systematic approach. And Australian Small Cap Investigator is really looking at longer term business opportunities with small cap stocks. So
absolutely. So with small cap systems, I said there's not a lot of momentum right now, but that could, and the market moves fast. That could change in a flash. Like next month, we could say, look, things have really started moving. We've got a particularly good momentum trade on in a one called Catapult Group. That's up about 80% in a few months. So they are out there, and let me tell you, those are much more comfortable to do than what I'm describing here. It's just that at the moment, there is such a dearth of movement. You have to look to try and play volatility. And that could come into play more. It's been unusually unvolatile this year. So next year, I expect that to pick up. So if you start to think, how can I take advantage of this? As I suggest in the article, if you've got a list of stocks that you're interested in, well, if we get some sort of sell-off, then that could prove to be a longer-term opportunity. So it's just a different way of thinking about things.
Awesome. Well, we'll leave it there. This will be our last chat until the new year. We're back on these from January the 6th. So I'll look forward to talking to you then, Cal. Have a great break.
Yeah, thank you, Woods, and Merry Christmas to everybody watching, and we'll be back next year ready to go.
Thanks for tuning in to FatTail Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. Until next time.